So we just had some new inflation data come out that suggests that inflationary pressures, after being well below the Federal Reserve's target, is now starting to creep up a little bit. And investors are responding to this pretty favorably. And this begs the question of, is higher inflation really a good thing, or why is low inflation so dangerous? Why has the Federal Reserve been so worried about persistently low inflation? And the problem is that in a heavily indebted economy like ours, persistently low inflation risks a pullback by consumers who are worried about paying debts that have a fixed value, and if you get disinflation or even deflation, which is falling prices, that'll affect your wages, and so you're paying back a fixed amount of debt with wages that are either stagnant or falling. And that's really the kind of nightmare situation Japan has been living through over the last few decades. And central bankers now, both here and also overseas, are really worried about repeating that in their own economies. So that's why there's been so much emphasis on pushing inflation up. Now the flip side of that is that if we do see an increase in inflation, some estimates among private economists are saying we're going to get closer to the 2% Federal Reserve target sometime in the middle of this year. Then the question becomes, what happens to this cheap money stimulus the stock market's really been relying on over the last 2 years? If we get to that 2% target, the justification becomes harder for continuing to keep short-term interest rates near 0%, which is where they've been since 2008. And this is also the same debate that's going to be happening in Japan come later this year, should the recent sales tax increase in Japan actually push inflation up to their target as well. So some big decisions coming up, should be really fascinating.